shareholders, visitors, and friends. Welcome again. This afternoon, we will look at the financial performance for 2015 for tTech Limited. We continue to focus on delivering, as Teddy said, an insanely good customer experience, and will now present the financial highlights of 2015. Our revenue in 2015 was $177.9 million, which was a growth of 38% over 2014. This growth was seen right across our business lines of recurring service contracts, projects, and also for consulting. In 2015, we earned approximately 18% of our revenues from new business, and our consulting arm, which actually began in 2014, contributed approximately 5% to our revenues. We continue to invest in all the areas of our business, and one of the two that we especially look at is our team members. Our personnel and training for us is very critical, and this is in order to meet the increased service demand for our growth in our business, and also in providing the tools to make us more efficient in terms of delivering our services. We have seen where this revenue has consistently grown and remained robust between the periods of 2011 through to 2015. Our net profit performance in 2015 was $21.4 million, an increase of 28% over prior year. The company continues to earn profits with a slight decrease seen only in 2014 over the last 5 years. After taking into account our operating expenses, our net profit remains strong, and we remain optimistic. Our operating expenses in 2015 was actually $152.1 million, an increase of only 38% over the prior year. As tTech grew, we saw the major areas of investment as our people, marketing, and infrastructure support costs. And this was in response to the increased demand for our services. This saw us having a growth in our talent pool, which increased by about 42%, as Teddy had mentioned before. And there was also the need to strengthen our management team to lead and grow the business. Our net profit earnings of $21.4 million in 2015 resulted in an earnings per share of 27 cents in 2015 compared to 18 cents in 2014. Our cash flows continue to be good, and this, along with the IPO funds that we received in our listing in 2015, will continue to be used for investment in the company in developing our other services. As part of that strategic initiative for performance improvement and management, we continue to reinvest our profits that are generated in the business for continued growth. There was, however, a small decrease in the profit margin that we see. But for us, we saw this as a short-term result of investment, as a decision to grow the business. Ladies and gentlemen, our balance sheet shows a total asset value of $172.5 million, an increase of 84% over our prior year. This was a result of increased business and investments in both hardware and software to provide the tools to support our growth, and it was further impacted by the initial public offering, which was done in December 2015. Our shareholders' equity was $172.5 million in 2015, an increase of 94% over the prior year. The increase in assets and shareholders' equity reflects our increased profits and your investment in tTech via the initial public offering. During 2015, we had a non-recurring cash impact costs of going to market with the IPO. From the IPO, our initial raise would have been $50.2 million, and our cost of going to market was approximately $7 million. tTech went to market on December 16, 2015. Our offering was closed within minutes of being placed on the market on the same day. We were listed on the Jamaica Stock Exchange on January 7th at a price of $2.50, and we closed trading today at a price of $6.01. We continue to see our shares being very attractive to investors. We look at our year-to-date performance for our period ending June 2016. We see where the growth has continued in 2016, with revenues being $105.6 million, a 30% increase over the same period last year, with net profit being $15.9 million, reflecting a 28% increase over the comparative period. The company remains strong, and our balance sheet remains strong. Ladies and gentlemen, we continue to strive for growth in shareholder value and providing our insanely good customer experience in the delivery of goods and services to our customers. Thank you.